All right, maybe we'll get started. Assalamu alaikum, everyone. My name is Nadeem Mian. I'm the portfolio manager for Sharia Portfolio Canada. And once again, thanks everybody for taking the time to join us this evening. Today's topic for webinar is planning for your retirement during these uncertain times. Of course, the RRSP deadline is right around the corner, March 1st. So we'd like to kind of, do one of these webinars just before that. So, it is obviously a hot topic right now. So I'm just going to get started. And again, once again, we do have a Q&A chat, a little Q&A icon up there. I do encourage everyone to put in your questions. I will answer them as much as I can, towards the end of the presentation, inshallah. So, all right. So before we begin, just a quick disclaimer, the material that we're going to be presenting tonight is obviously for informational purposes only, informational and educational purposes only. We obviously suggest that you speak to your investment professional or financial advisor, on any specific advice or anything of that sort. So, that's kind of it, standard disclaimer. So before we begin on the topic, just a quick overview of Sharia Portfolio, Canada, who we are. Some of you may be joining this webinar for the first time. Others, are returning. So we obviously are welcoming back the returnees. And if you're a first timer, we hope this is not your last time you join us, inshallah. So, Sharia Portfolio Canada, the parent company, is Sharia Portfolio, which, kind of got started in 2003. By our founder, Noshad Virji. And, not to go through the whole exact timeline here, but, there was obviously a pretty good, strong growth in the business. We were, the company at that time was serving only Muslim Americans, providing them with, a full service wealth management services, but making sure that, their investments were Sharia compliant. Of course, with the growth of the business, it expanded into Canada. We got our official Canadian securities registration in January of 2020. We are licensed in Ontario, British Columbia, Alberta, and we are currently looking at expanding into Quebec. I mean, we've applied, well, we're hopefully inshallah soon we will be in Quebec. So basically, that's a little bit about Sharia Portfolio. Our goal and our mission is quite simple. We're here to provide full service wealth management advice. We hope to help clients reach their financial objectives, but making sure that they do it while they conform to the Islamic values. Some of you may also know some of our sister companies, such as SP Funds. That's a sister company of Sharia Portfolio, which is the company that launches our ETFs, the SPUS, SPSK, SPRE, three of some of the ETFs that you might be familiar with. So again, just a quick overview on who we are. We might come back to this towards the end of the presentation, but the topic, of course, of tonight's presentation is retirement planning. So what I guess I wanted to do was just, start off with maybe in Islamic perspective on not just retirement plan, but maybe wealth planning at large. So I did kind of come up with a couple of hadiths. The first Sahih al-Bukhari was narrated by Sa'd bin Abi Waqas, which the story goes that he was a sick man and the Prophet, peace be upon him, visited him, and he said, quote, you better leave your inheritors wealthy rather than leaving them poor, begging others. You will get a reward for whatever you spend for Allah's sake, even for what you put in your wife's mouth. Again, kind of speaking a little bit more towards estate planning and, having your wealth, that you're leaving to others, and maybe having your wealth at a point where, you yourself are not in a position where you're too dependent on others, right? And the other hadith, which I'm sure it's been quoted quite often, which is by Anas bin Malik, narrated that a man said, "O Messenger of Allah, shall I tie it?" And this is referring to the camel here. Shall I tie it and rely upon Allah, or leave it loose and rely upon Allah? He said, tie it and rely upon Allah. So, of course, Allah is the provider of everything, but, we will tie it and, of course, rely on Allah. That's the way I look at it, in the sense that, yes, Allah subhanahu wa ta'ala is the provider, but we obviously still need to take our necessary actions to make sure that things go according to plan. So starting off with kind of the importance of retirement planning, and I guess jumping into a dunya perspective here, these are just some basic things that will kind of point out that why we need to plan for retirement. And a lot of this is I'm not reinventing the wheel here. This is just more a reminder for people, right? Number one, we cannot work forever, right? A lot of you are probably working right now, but you must realize that at some point, we are humans. We cannot work forever. So that income is definitely going to stop at some point. The average life expectancy is increasing. Despite what's happened with the pandemic, the average life of humans has actually increased over the course of time through medical and other types of advancements. Higher complications. As we get older, we can have medical complications, and it's always, again, not just for retirement, but having a good retirement plan can also help you in that. It's best to fulfill, and when you retire, it's just not, your life's not over, of course. You have life aspirations that you might want to do, and having a good retirement plan can help you reach those goals as well. Relying on one source of income, now, especially today, people look at the CPP and or some of the government benefits, and you cannot rely on them if you want to actually have a decent retirement life. Depending on children, this is a father of four speaking here, so I will, despite having four kids, I will still say that maybe back many years ago, maybe my parents' generation or the generation before, children kind of became their retirement plan, but obviously that has changed, especially coming into the Western world, where some of those values might not have crossed over. So we need to be a little bit more self-sufficient when we get older. And of course, these are just some last minute points here. Contribute to the family even during retirement. Once again, just because you retire doesn't mean that that's it. You obviously still want to be a contributor, an active contributor to your family, and having some wealth to back you up can help you with that. So whether that means, for example, helping your grandchildren with tuition or something of that sort, weddings, whatever, right? All of that is just, again, a good part of the reason, the importance why we need to have a good retirement plan going forward. And last but not least, start planning early and diversify investments. And maybe I hammer in on that point on a later slide. Right? So kind of jumping into some of the tools, and I did give this webinar last year. I'm not repeating it again this year. So I'm just kind of touching on some basic stuff. If you are a little bit kind of new to this, I would encourage you to maybe go onto our website and revisit the one that we did last year. That was a little bit more basic, but I am going to talk about some of the tools that we do have for retirement. And jumping right into it, the RRSP obviously is the most popular plan, right? And that's this is a registered plan by the government. It's specifically for retirement. There are many different types of RRSPs. You have self-directed, which means that you have the ability to either manage it yourself or you have an advisor manage it for you. You have spousal, which is just another form of a self-directed plan, but you're putting it under your spouse's name, but you get the tax benefit. Group plan, that would be something like you would have with your employer, where you're putting money into this plan, your employer's matching it. So that's a lot of companies do that as an incentive to retain employees. And there's other plans such as LIRAs, which are more like locked-in retirement accounts. These are really kind of special situation retirement accounts where if you left your employer and you transferred the plan over, it could be a locked-in plan. But again, not to get to too technicals. Of course, if you have any questions on like a LIRA plan, you can put it in the Q&A box. I'll answer it later. And then, of course, these are all the types of RSP plans before you retire. Once you are retired or once you start withdrawing from it, the RSP basically converts into an income fund. And these are registered income funds. So typically the RSP will convert into a RIF, or if it's a LIRA, it'll convert into what's called a life income fund or a locked-in retirement income fund. Essentially, what we're doing at that point, when it becomes an income fund, like a retirement like a RIF or a LIF, is that you can no longer contribute to it. Meaning to say, when you contribute, you obviously get these tax benefits. Now, at some point, the government's saying, listen, you got to stop contributing. You're of the age. Now you need to start withdrawing from it. So when you start withdrawing from it, that, whatever amount you're withdrawing, that does become your taxable income. The idea here is that you've worked all this time in your life. Now you built up this account. Now it's time for you to start withdrawing from it. And when you withdraw from it, that's when you get taxed. So the idea, of course, is that when you're putting money into it, you're making a lot of money, you're in a high tax bracket. Now you're retired, you're in a low tax bracket, you're withdrawing this money because you need it. But guess what? Government's still going to tax you, but they're going to tax you at a lower rate. So those are RSP accounts. The next account that I'm going to take a look at here is basically pension plans and defined benefits plans. Now, these plans are more, they're not as popular, with big companies anymore. Back in, maybe about 15, 20 years ago, defined benefit plan simply means it's like a pension. So I guess the best way to explain this is they can be employer-sponsored retirement plans, such as, again, you're working for a big company, and the company really kind of takes a little bit from your salary, and all they're really saying is that we're going to take X amount of dollars from you. We have this formula, and when you retire, we're going to guarantee you that we're going to give you X amount of dollars per month, and so forth, right? I guess the other way to kind of explain this is if you're a government employee and you have a pension where you've put in the years, you've had X amount of years, X, your salary was X amount of dollars. And again, they use the formula, and ultimately you have a guaranteed income through life. So there are obviously a lot of benefits to that in the sense that you do have a peace of mind. But again, it's unlike an RSP where you actually see the amount and you're managing it yourself. This is something that, again, is a little bit different, but not as popular as it used to be, for the simple reason that companies now especially are more saying, listen, we'll just give you the money, you do with it what you manage it yourself. We don't want the liability of providing that guaranteed income for you, right? But nonetheless, same thing over here, where when you do in your retirement years, when you are getting income from your pension, that is a taxable income that you're getting. It's not tax-free. So similar to what you would see with the RSP. The other thing I'll also mention is, in some cases, if you are in a defined benefits plan, like for example, let's just say you're a teacher and you decide you're going to leave the profession a little bit early to either retire early or do something else. In some cases, you might have the ability to opt out of your pension plan and actually take that money yourself. And then what ends up happening is there's something called a cumulative value. That money, then you can actually manage that yourself. So that essentially you take control of your pension in the form of an RSP. And so again, that would be there are certain situations that you can actually take that lump sum amount and say, you know what, I will not rely on the income stream. I would rather just take the whole amount and manage it myself. And there you go. And again, defined benefits plan and pension plans. Of course, the most popular one, and some of you might not know you're already in it, is the CPP. For example, if you're working here in Canada and you get a paycheck, that every month you're contributing to your pension plan. So when you do come to retirement, you are entitled to the amount that you've contributed to the plan. And there's also other plans such as the old age security and the guaranteed income supplement. These are all types of defined benefits plan. Now, the guaranteed income supplement isn't necessarily guaranteed. A lot of these plans have specific requirements, like the CPP, you have to have contributed to it. The old age security, there's all sorts of residency rules and whatnot behind it. And the guaranteed income supplement means if you're making too much money, you don't qualify for it. So again, we're not going to spend the whole lecture on government benefit plans, but something to kind of keep in mind as far as, in your retirement years, what are some of the income streams that might be available to you? Now, kind of looking at the TFSA here, another tool of retirement, it acts more as a complement to retirement planning, in my opinion, but I think it's a great plan to have. The plan, it has tax benefits, and not similar to the RRSP, but you can definitely use them both in your pre and your post retirement years. It's a tax exempt account. Like the RRSP is more of a tax deferred account where you're actually putting the money there, the money's growing, and you're not being taxed on it, but when you take it out, you're taxed. The tax-free savings account is money basically after tax, meaning to say when you put money in there, you're not getting any tax credit for it per se, but that money is still allowed to grow tax-free. So capital gains, dividends, and income is not taxable. I did put an asterisk there, and what that simply means is that there are, U.S. sources of income are subject to a 15% IRS withholding tax. So the IRS does not recognize the TFSA, and as a result, if you are getting any dividends from U.S. paying securities, you might see that, okay, well, I got $100 dividend, but the IRS took 15. Okay, I'm only left with 85, right? And the CRA won't take that 85. But the main focus, the main perk or the benefit of the tax-free, the TFSA, is the fact that you can grow that money. Now, there's all sorts of limitations as far as how much you can contribute if you withdraw, and all that other stuff. But overall, it's fairly flexible. Again, I would obviously speak to your financial advisor in terms of how much you can contribute to it and so forth, right? And like I mentioned, the withdrawals are not taxed and do not affect your taxable income, meaning when you're withdrawing from it, this unlike the pension and the RSP, when you're taking money out of it, it's going to hit your taxable income. This does not hit your taxable income. In some cases, if you're getting a lot of money from your RSP, the government might claw back like some of your other benefits, like old age security and things of that sort. That does not happen with the TFSA, right? So again, something to kind of keep in mind. Other tools for retirement, and I wanted to put this down because I do see a lot of this in the sense that, like, first of all, we have the non-registered account, which is basically, it's an investment account. It's a taxable account. You can put any money in there, withdraw, whatever. It's taxable. All the realized gains and dividends are taxable, in that account. And I complement that with the real estate, because for some of you who are, for example, been living or own a home and have grown in that home, family, now you're coming to the stage where you're empty nesting, kids are getting married, they're leaving, and they're having a good life, inshallah. Now you're at a point where you don't need that house anymore. You don't need the 4 bedrooms or the 3 bedrooms or whatever, and you are downsizing. And in a lot of cases, what ends up happening is you might have no mortgage on it, or very little, and by selling that and downsizing, you do have a windfall of cash. And in a lot of cases, that windfall of cash could be a great event for planning a retirement. And that's why I included with the non-registered investment account, because in a lot of cases, that money, once you sell the house and you move into a smaller dwelling, the net result can, most of that money can go into a non-registered investment account, and you would invest that money accordingly and hopefully build that, right? So now jumping into what I think is the title of this event, which is, retirement planning during an uncertain time, right? And this word is out there quite a bit right now in the news, and it's risk. It's all about the markets going up and down and what's going on. We got inflation, we got interest rates, we got Russia, Ukraine, and the reason why I put the slide here is because I do speak to a lot of people that are that have for example, they worked quite a bit. They might not be retired yet, but they haven't really invested, and what keeps them from investing is the fact that risk, right? And these are all sorts of risks that you might see: capital risk, exchange rate risk, political risk, all sorts of things that can maybe, if you invest your money, can have hurt. But the risk that I want to kind of highlight, because this is all the here and now risk that we all hear, but the risk that I want to kind of highlight for tonight is this: this is the forgotten risk. This is the what we call the longevity risk. And the CFA Institute defines it as such. It's the economic consequences of outliving your financial resources. It's as simple as that. When you have a finite amount of capital, you must that when a finite amount of capital must provide lifetime income, portfolio management often becomes a tug of war between capital preservation, terminal wealth, and lifetime spending, consumption. So these are the two things that we're going to try to tackle today, or I not tackle today necessarily, but I want to highlight because I think not enough is being thought about on these two things as far as the longevity risk. You have this capital, you have life expectancy. Now we have something. There's another risk out there right now, which is called inflation, and I'll start with this slide. I did show this slide last year. I'm going to show some of the slides from last year again, because it's simplistic in nature, but it really says everything. That this is. I'm a Michael Jordan fan. I grew up in that era, so there's no better example for me to use for this illustration. Back in 1986, when Michael Jordan, I guess, first started, a pair of Air Jordans costed about $27. Today, a pair of Air Jordans cost $265. Right, that's up 900% in 35 years. Average annual increase is about 6.8%. Right. There's also something called burgernomics. Now, of course, Big Mac is not halal. I think some of the best burgers are actually the halal ones. Actually, all the best burgers are halal. But nonetheless, there is something actually called the Big Mac Index, and what it does is just kind of studies, the price of the Big Mac and what it's done through the course of time. And you could see again over here that back in 1986, a Big Mac costed about $1.89 Canadian. Today, that number is at $5.59 Canadian. It's up over 200% in 35 years. Average annual increase about 3.2%. Right, and to be honest with you, that is actually the 3.2% is actually kind of been right around what inflation is, because this is what inflation has been. And so this is a 30-year chart of the U.S. Inflation rate. And, the most important thing to kind of grasp here is this. If 30 years, like for a whole generation, inflation really hasn't been an issue. I mean, sure, you had this little event here, I guess, but it just kind of lasted one day and that was it, right? But it hasn't been an issue. It's pretty much stayed around the 2% as an average. Right. And now what we're seeing is, an area where we haven't been in a very, very long time. And this again speaks to the value of money. It speaks to back, the pair of Air Jordans that I just showed you, is the fact that, if the price of living, or the price of goods, for example, is going up by an above average rate, then your wealth, your terminal wealth, right, needs to keep up. And I think that's really the heart of this thing, is that we are in uncertain times, of course, and I think it's important now to actually make sure that you have that balance with your wealth and your consumption. Right. Looking ahead, these are just some inflation forecasts. They do expect inflation to come down. Now, again, I don't mean to scare everybody here and say that we're going to be at 7% inflation this whole time. No, we're not. But you know what? We did have a spike, and that spike can still continue for a few quarters, maybe. But ultimately, they do expect it to kind of taper down, maybe back to normal. But even if we do get back to these targets, they will be slightly higher than what we've been used to the past 30 years, right? And at the same time, what I'll say is that it's not like inflation's gone away. In other words, I mean, the simple example to tell you is, if it was at $1 today and inflation went to $1, went to 107, it's at 7%. Then if next year it grows at 5%, it's going to grow 5% on top of the 1.075. So again, this is compound growth. So keep that in mind. It's not the price of good. It doesn't mean that it's at 7%. It grew this year. That means 3%. That means that it's going to cut down. It's not. It's just going to increase at a slower rate. So trying to look ahead, but really trying to strike the chord that, look, the importance of retirement planning is now more than ever important. Um, and I guess these are some tips. Because retirement planning is a very complex subject, in my opinion. It's not something that I can present in a few slides and everyone can go home at night and say, hey, all right, I know what to do now. No, but there are some basic tips that I think everyone needs to understand. And the first thing is that you have to understand your time horizon. That's probably the most important thing. Of course, Allah has his own timeline on everyone, and we don't really know when that is. But we still have to kind of prepare as if things are going according to plan. So meaning to say, your time horizon means, okay, I am X years old right now, and I plan on working for the next, say, 20, 30, 35 years or whatever, or 5 years, for example. So that's your time horizon. And you have to also determine your retirement spending needs. Not everybody, has the same lifestyle. Some people, have higher expenses than others. You have to kind of factor that in. And then ultimately, once you do have a timeline, once you do have, an idea of what that timeline or what dollar amount you can attach to it, you can start to kind of calculate, okay, this is how much money I might need, at the time of retirement, right? And of course, you have to at that point understand that what are your retirement income options at that point. So going back to the whole CPP, OAS, if you are in a benefits plan or not, what does your RRSP look like? What does your TFSA look like? Things of that sort. Now, having said that, I might be biased here to say this, but I think you do need a good financial advisor. This is not something that and I'm going to poke fun at Questrade for this. Where they say that you can be 30% richer, not necessarily the case, because you might be saving $5 here or there, but in the grand scheme of things, a good financial advisor can be priceless. So, this is obviously a long-term plan. This is not short-term. There's a lot of little things that might be missed by an individual trying to do this on their own. So I would obviously encourage that. It's always good to have a good financial advisor, because sometimes I've even seen where people have gotten into investing, they're doing it themselves, and in some cases they've blown themselves up. And what I mean by that is this chart right here, right? This is how we manage money, in the sense that we are trying to find out what is the best mix for that particular individual. We don't put our eggs in one basket, whereas in some cases you might find people that will be like it's all or nothing on crypto. Yeah, something of that. Like I've heard these stories before where they will take their entire savings and plug it into one theme or one idea or whatever, and all of a sudden, it's a recipe for disaster. So we do like to take a more of a prudent approach. We like to diversify. We like to find the optimal mix for that individual person, and then ultimately manage that money for you, right? And this is it. I mean, this is what we can offer. Of course, the purpose of this presentation is more for educational purposes. But as far as Sharia Portfolio Canada, what we can do, we are an independent full service wealth management firm. We're not here to provide we're not here to sell you product. This is more of a service that we're doing. We're fiduciaries. Like again, we're not compensated by fund companies or anything of that sort. We charge an annual account management fee to manage your money for our advice. And of course, we try to align, values to your objectives. That's what the nature of our business is. So with that, I mean, and the last thing I'll just say is that, for those who are new to our firm, we are partnered up with Fidelity Clearing Canada. They act as our custodian bank and broker, meaning to say we're not selling Fidelity products, but we use them as our back office and the institution that will hold the assets, provide all the administration stuff, such as tax receipts and things of that sort, right? And so with that, I guess I'm going to close. And there was a poll that I think my colleague disseminated. So I do hope you guys answer that poll. And I'm at this point, I guess I'm going to open it up to the floor and take some questions and answers. So I guess I'll jump into it here. What are the accreditations that are in your possession as of now? Any planned in the future? As far as my accreditations, personally, so I mean, first of all, I've been doing this for about 20 years. As an investment advisor, I've been licensed with IROC and for the most part, now licensed with the OSC. Uh, did a Bachelor of Commerce in Finance from Coady University. I've registered with the Canadian Securities course. I've done some of the courses there. I'm also a CFA charter holder. So that, I guess I would say, when it comes to investing, is probably the gold standard in my opinion. But some people might disagree, but I think that is not a unpopular opinion. So that is that. Okay. So let me just see here. Okay. So I got a couple of questions here in the chat. Okay. Can you share how Zakat is calculated for RRSPs, TFSAs, and RESP? Okay. So that's a good question. So every, we do have a Zakat calculator on our website, but obviously I encourage you to not just use our source for that. I encourage you to, speak to your scholar and things of that sort, and maybe try other Zakat calculators as well to get an understanding. One thing I will say is that though that every Ramadan we do do a specific Zakat webinar where we bring in a scholar to speak on this topic. And I'm pretty. This year we have an imam that is well versed on this topic and all the technicalities of it. Not of course, there are obviously the spiritual rewards is one thing, but the specific questions like you're asking, how much of it on the TFSA and things of that sort. We're definitely going to have that, and the imam will be covering on that. We'll be covering this on that. So I will say that to the brother Muhammad, just keep us, for the Zakat webinar. Please just register yourself when that does become available. Right. Another question: which industries do you think will excel in the current inflation geopolitical climate? That's a great question, also. And we are getting a lot of those questions out here. So I'm going to answer this question according to how our current portfolios are positioned. We are overweight, energy. We are overweight material, meaning mining stocks. And at the same time, I think we have a little bit of exposure into healthcare as well. I guess that's been our thing, and more than the geopolitical climate, inflation and rate increases is probably where our focus is. And I think with the situation in Ukraine and Russia, we think that is actually probably a little bit more transitory, in the sense that yes, it's bad now, but you know what? In the past, if you take a look at the past, any type of invasion that's happened, whether it's Vietnam, Crimea, or Afghanistan or whatever, they've been actually, markets have actually bottomed during invasions, believe it or not, and have gone higher. But we do think that in an environment where rates are increasing, we want to be in companies that aren't necessarily going to get hit really hard when rates go up. So trying to stay away from some of the growthy names and more into some of the value names, like I mentioned, with energy, mining, and things of that sort. What are halal options for RSP? Okay, so what halal options are basically, right at we got two types of offerings at Sharia Portfolio Canada. First is what we call the express service, and that is where we limit the model to ETFs only. So ETFs meaning we use exchange traded funds. Currently, we are using the three funds from our sister company, SP funds, but that doesn't mean that we can't use other ETFs. If there's a need, if there's another ETF that we think is in the best interest of our clients, we can use it. But of course, they have to be Sharia compliant. So that's the express service. You can start with as little as $1,000. Is about a 0.5% is the account management fee on that. And we would pick the model according to what your investor profile is and what your objectives are. we also have the access service, which incorporates individual stocks along with the ETFs. For that, the account management fee is a little bit higher. But in that case, you are getting a little bit more of a hands-on approach to your money, where we're not just using passively managed ETFs. We're also kind of managing individual stocks based on our investment outlook, or where we see opportunities, right? And I guess the second part is what do you charge to manage an RRSP account? So whether it's an RRSP account, TFSA account, or whatever, the account management fee is going to be the same. We don't have an RRSP account fee. We have an account management fee. And that fee, as I mentioned, it depends on which service you go with. If you go with Express, it's 0.5%, meaning 50 basis points per annum. And we charge that over the course of the month on a monthly basis. And the second is the Access, which the fee can range depending on how much you have with us. And it starts at 1.5% and it goes down to 0.75. Oh, sorry. Hold on. Okay, sorry. Let me just go back here. Just bear with me here. Okay, what is the process to have an RRSP account? So the process is quite simple. To kind of open up an RRSP account, you can go onto our website. We have a link there, and maybe I'll share it here if I can on the chat, or maybe Brother Salahuddin, if you're here, you can put it on the chat. It's a Get Started tab. You could put your information down. It takes just generic information such as your name, address, date of birth, et cetera, and it pre-populates onto that form, onto a form, and then one of our team members gets in touch with you in terms of opening the account. If you have an RRSP account at another financial institution and you would like to transfer that over to us, we will happily do that. You would provide us with a statement of your current RRSP account, and we would, your institution it might charge you a fee for transferring it, but we're not withdrawing from it. All we're doing is we're simply moving it from one RRSP account to another, and so that would be it. 1 second here. Okay, just some quick questions here from the same brother. Are there any chances of losing money in an RRSP account? Yes, there is. We're not guaranteeing anything. We're not investing in riba where GIC is guaranteed. No, this is nothing of that sort. We are investing into stocks. We also have we invest into Sukuk, which is safer than stocks, and I guess from a volatility standpoint. But it's not guaranteed, and we also have a real estate fund, again, not guaranteed, and you will have fluctuations there. And another question here: are you planning for a halal mortgage in the future? At this time we are not. I think we are in the business of providing investment advice and not mortgages. So at this time, I don't believe we are. Okay, I got another question here from Brother Amin here. Sorry. Would you buy stocks for me if I wanted a specific stocks, or do you just buy the SPSK, SPUS, and Sukuk? Okay, so like I mentioned, we do have the ability to buy individual stocks, and we do. We manage that for you. This is not. Normally this is not like a broker where you can just call in and say, "Can you buy this for me, that for me?" We can. But overall, our platform is designed in such a way where you would say, okay, you know what, here's my money. Tell me what you're all about. Once you kind of said, okay, I agree, then we would manage that money for you. Now, in the event, like, for example, we can customize it. Like for example, let's just say you work for a company and they give you their company shares. You can say that, listen, don't buy me shares of those companies. I work for Microsoft. I don't want any shares of Microsoft in my portfolio. Understandable. Likewise, if you wanted to add a specific holding into your portfolio, if it was a one-off, not a problem. We can do that. For example, you can say, instead of Microsoft, buy me Google. No problem. We can do that. But overall, we're not going to, order, take, and build your portfolio based on what you want. It's more, taking advantage of our service and our expertise. What are the minimum investment amounts? So I think I might not answer that. So for the Express, the minimum amount is $1,000 to start. The minimum amount for Access, which is the actively managed portfolio, that is $100,000. And so, yeah. Okay, here's okay. Is GIC halal in RSP? So GIC is a guaranteed investment certificate, I believe is the acronym for it. That's what's mostly offered at the bank. It's riba, so I guess it's not halal. And again, it's obviously guaranteed here. Okay, one second, I answer this. What is Sukuk? Is it available in Canada? Okay, so that's a good question, and I'll kind of elaborate on that. So, a Sukuk is, I guess the best way that I like to explain Sukuk is by using an example, right? So here in Canada, for example, if the government wanted to build like an infrastructure project, just as an example, right? Like a toll highway. Over here in Canada, what they will do is they would raise debt, like a bond maybe, tell people, okay, you invest in this bond, we're going to pay you 5%. It's a 10-year bond, standard riba product. Okay, obviously it's haram. The government will take that money, they would build a highway, and off you go, right? The way that a Sukuk works, it would be a little bit different in the sense that, first of all, I mean, you're probably dealing with a Muslim country, number one, and not Canada, because Canada doesn't do Sukuks. But the government at that point will say, okay, we're building this highway. This asset is generating a revenue. So Sukuk holders are entitled to a percentage of the revenue that's being generated on the asset. It operates more like a lease agreement than a finance agreement. So, for example, like I guess like a car, like you can lease a car, or you can finance a car. Lease is more of a kind of like a rental situation versus purchasing it through financing and an interest rate, right? So that's number one, what a Sukuk is. So Sukuks are essentially Sharia compliant fixed income products, and for the most part, if you look at the Sukuks around the world, I would say, again, I don't have the exact number, but I would probably say like 90% of them are issued by sovereign governments, and Muslim, of course. What we do for Canadian investors who want to buy Sukuk, we do have a Sukuk fund. So what we've done is there's an index out there. It's called the Dow Jones Sukuk Return Index, and that has about 875 Sukuks in there, right? What we've done is we've created a fund that tracks that index. So whatever that index has, the ETF SPSK buys into that. So essentially, with this fund, you are owning about 75 Sukuks. They could be from Saudi, they could be from Malaysia, they could be Indonesia, and now they are denominated in US dollars. But this fund has kind of been packaged. It trades on the New York Stock Exchange. It pays a monthly income. I think the yield is about 2.5% or something like that. And that's what it's kind of, the objective of this fund really is to track that index, but that index, the Sukuk itself, is paying you a monthly income, and it's trying to preserve your capital. It's not guaranteed that your capital is going to be preserved, because there are still some ups and downs in the Sukuk market, but overall, it's not as volatile. Historically, it hasn't been as volatile as the equity markets. So I would say, is it available in Canada? I would kind of maybe Google SPSK and put Sukuk there, and you can see that there is a fund out there. Or of course, you could contact us and we can do it for you, inshallah, right? Okay, 1 second here. Let's see. So we got another question here. Should I wait for stocks? Should I wait for stock market dips to buy stocks? I guess the answer for that is, time horizon, right? What's your time horizon? If you're telling me that your time horizon is 6 months, then I can't really answer that question for you. And I could probably be like, if you need the money in 6 months, I probably wouldn't risk it. But if your time horizon is longer, if your time horizon is, okay, I'm doing this in my RRSP account, I'm not going to take any money from it in a while, then, in time, it's been proven that, the best times are to buy on these dips. There's a chart out there, if anybody follows me on Twitter or follows me on LinkedIn or Facebook, I'll post it. But it basically shows a chart of all these geopolitical events that have happened. Most of them have to do with invasions, unfortunately, and wars. and it talks about the market kind of dipping I think it was just before the invasion, or just right at the invasion. And historically, it's been proven it's been a great time to kind of get in, right? But yeah, like I said, long term, I think if your time horizon is long term, these dips can be great times to get into the market. Got another question. What measures do you take to minimize the chance of losing money in RSP? So here's the thing. We don't have one portfolio. We have a portfolio that's designed for a conservative investor. We also have a portfolio that's designed for an aggressive investor. Not every client is the same. Not every person is in the same life cycle. Some are 20 years from retirement. Their objective, the way that they want to invest money, is going to be different than somebody who is 5 years into retirement, right? So to minimize chances of losing money, right, would mean that you are somebody, for example, that is either you're retired and this money, you don't want to lose it. That's one. Two, it doesn't mean that you're old and retired. It could just simply mean that you just don't have the appetite for risk, right? And you can be 30 years old and you just feel like, you know what, I just don't have and that's fine. And there's a lot of that's just who you are. In that case, we do have conservative options for you, where most of the money that is invested is into Sukuk. We have a smaller exposure into equities and a smaller exposure into real estate. But really, what ends up happening is to minimize chances of losing money, or better yet, to minimize volatility. It's the diversification that really will help, not necessarily buying this or buying that. It's the mix of those three types of assets. When you put them together, reduces the volatility, and hopefully, can get you that return, that you're looking for. So that would be it, right? Is the sense that we do have a variety of portfolios, for every different type of investor for you to opt into, and that's what we do. We the first thing that we do is we speak to our clients. We, in some cases, we'll get them to fill out a questionnaire and get a better idea of as far as who they are. Got a question here from Nadeem Ahmad. Were the CFA exams easy or difficult to study for? What topics are tested in the CFA? Okay, that's a great question, because my CFA story is somewhat unique. My dad, who's not in finance, told me a long time ago when I was young and I didn't have any gray hair, that, listen, do your CFA exam. And he's a typical Pakistani dad, and trying to pound in education into me. And I didn't really listen to him at that. I took the exam, but I didn't really give it a fair shot, in my opinion, right? So fast forward many years, right after being married and having 3 kids, I decided to do it at a later age. I was in my late 30s. I was 37, 38 or something. So I did it at that time. So were they easy? No, they weren't, especially when you have married and you got 3 kids, right? I should say 3.5 kids. One was on the way. So it was not easy. It is considered one of the hardest exams in the world. If you Google it, hardest exam, CFA is going to be there. So yeah, it's not easy at all. And as far as the topics that are covered in the CFA, there's 3 levels there. Every level has heavier weighting into certain parts, but it covers everything from financial statement analysis, which is basically accounting, ethics, portfolio management, equities, bond, fixed income, derivatives, everything. So I would say everything underneath the finance sun, it is pretty much covered. And do you have a halal guaranteed income option in RSP? Again, we don't have a guaranteed option. I think that kind of to have it Sharia compliant and guaranteed, it's like oil and water. It's hard to mix those two. Okay, and I have another question here. Let me see. If I were to invest in crypto to diversify, what percentage of my total investment do you recommend I put in? Yeah, this is an interesting question, and I might answer this by kind of saying, okay, well, crypto, it's a new asset. It only got started in 2008. There's a lot that's being said about it, good and bad. Um, you know, I would say this, in the context of portfolio management, right? Number one, we don't have any crypto in any of our moderate, conservative, or income portfolios. We do have, we try to have some exposure in the aggressive ones. And for that, we are maximizing it as of right now only to about 5%. And that's a max. So we're not going above that. And again, we're doing it in a Sharia compliant way. We're only using, the underlying is Bitcoin only. So we're not getting involved into other types of coins that may or may not be compliant, right? So, but yeah, I guess I'm answering that question according to what we're doing right now, and what I believe is the right answer, which is 5% right now is what we currently have in our aggressive and our growth models. And so with that, I think that's about it. I guess thanks everyone again for joining us. There are no more questions as far as that I see, and I look forward to we every month we do a Wall Street to Bay Street market review. We used to do it every week, but we've kind of done it on a monthly basis. So I would encourage you guys to register for that or join us for that. I'm just going to talk about again some of the highlights. That's more specific to the market, meaning what happened in the month of February, for example, and a lot has obviously happened. And I'll be talking about that and answering your questions for that. So with that, again, Jazakallah khair for attending. I really enjoyed the questions. Hope you liked the presentation, and see you again soon, inshallah. Assalamu alaikum.